All right. Good morning, everybody. Real quick before I forget, I built a credit calculator so that if you're running credit spreads or iron condors in a probability-based trading strategy, right? Like looking at your delta and running 70% out of the money credit spreads. You have to make sure you're getting enough credit. The win rate isn't good enough, right? So this calculator that I built, you put the information in it, how wide the spread is, how much credit you're getting, what your profit target is, what your loss target is, and it will let you know if you should do the trade or not, if there's enough credit being collected. And if there's not, then you know you need to change something, either, change the strikes that you're using, change your profit target, do something, or don't take the trade. I've made it in Excel and I made it in Google Sheets. There's a link to this for the Google Sheets version, which is what this picture is, within the YouTube description. So you can just grab it. Again, I don't sell these things. I think they should just be given away. So have at it. It's yours. You'll find it in the YouTube description, probably close to the bottom. I think that's where I ended up putting it. So the consensus was after the close yesterday, when we opened back up, that we were very likely going to continue the upward move. That was the call that I made yesterday afternoon. And yeah, I'd say that played out fairly well. Just be aware we have European Central Bank, and then Christine Lagarde's going to come out and talk. She's like the European pal. I think she's more manly than he is, but that's a different conversation. And then Friday we have Bank of Japan with its rate decision. So we've still got a lot on the table, right? Volatility did drop off a little bit, and I was really surprised when I was going through Spot Gamma that unlike other times where we've had stacked events, the volatility didn't hold up, right? When we've had, say, CPI right behind an FOMC, the volatility wouldn't drop off after the FOMC. It would actually stay elevated because there was still CPI on deck. With all these nations around the world about to do a rate decision, there was the expectation that volatility really wouldn't fall off until at least after those other decisions. And that's not what we saw. Volatility did drop down. So now it's going to be more of a question on, is it going to come back, or are we just going to hold those lows? In the bigger picture, volatility tends to set a bottom through the summer, and it makes sense, right? Lower volumes, lower participation, and volatility, the VIX, is really nothing more than a mathematical formula that's looking at options volume in the SPX. If they're not trading heavily in the SPX, then the VIX isn't moving. Everybody's gone for the summer, not a lot of hedging, volatility drops. I mean, it's as simple as that. So if you are holding a bunch of things in your portfolio and you're thinking about getting some insurance, now's a really great time to do it. Insurance is cheap. Just keep in mind, that's not a trade that you want, right? It's not like you decide that it might be a good time to short a stock or buy a stock because you think it's going to go up or down. Buying VIX is not that kind of trade. It's only insurance. And if you think about buying insurance for your house, say fire insurance, you don't want your money back. The only way you're going to get your money back is if your house burns down. So, you don't buy the insurance and then sit around with your fingers crossed, hoping that your house burns down to get your money back. Well, it's the same thing with buying the VIX. You don't want to buy VIX calls right now because you think you have a trade that's worth making some money on. You want to buy VIX calls right now if you need insurance, and you can buy that insurance cheaper right now than you could at any other point this year. Right? So just kind of keep that in mind, that VIX as a trade, and believe me, I mean, there's a lot of people that trade it. If you want to trade it, then time it with momentum, time it with a breakout of a pattern, anything that you would normally use for a trade. But if you're just buying it because it's low and you think you're hearing a lot of people say it's a good time to buy the VIX because we could see some big moves. That's not a trade. That's insurance. So we got the ECB. We do have US jobless claims. We have hopefully something good coming out of McDonald's. Then we got a presser with Christine Lagarde. And we got this meeting with the large banks. I'm not sure what to make out of this, but definitely keep your eye on financials today. Don't use the generic XLF. Really keep your eye on the KRE, right? It'd be your regional banks ETF rather than just a broad-based generic ETF like XLF. XLF has insurance in it. You know, it's got trading desks, trading firms, credit cards. This is a Fed meeting on large banks. So you really want to focus on an ETF that is focused on banks, right? That makes sense. I think it makes sense. Yeah. Good morning. How you doing? Yeah, you gotta go to bed sooner. All right, so the anticipated impact for today, you can see we've got a lot of these darker red solid bar anticipated high volatility events. And then tonight with Japan. Notice that in Japan, it's not just their monetary policy statement, it's also CPI. So yeah, I mean, it's a real big deal tonight, right? This is the one, the biggest one for the whole week. You really want to think about what you're holding on to right now. Know what you own. Taking a look at what's going on around the world, as we ended on a high note yesterday, that echo went out around the world and markets just continued that move. Green on the screen across the board, every single market around the world. China being up the most, look at that, nearly 4%. And again, you know, their index is different than ours, but it's still an index. Think about the S&P being up nearly 4% on the day, right? Or NASDAQ or Dow, Russell. So it's a big deal. China's stimulus is still going. It's not done yet, although we didn't really see the kind of love that we were expecting to see in those China ADRs, right? BABA, Baidu, PDD, JD, NEO, XPEV. We didn't see those high flyers get the love, but the names in that package, the lesser observed names, the ones that are a little more obscure, did so much better, right? So volume sitting at 107 this morning, right where we should be, not too heavy, not too light, a little bit of Goldilocks. It's interesting. I would have expected it to be a little lighter, waiting on ECB, and yet that's not what we have this morning. It is a full house, though. You can see we have a lot of things on deck for today. 8:30, 10, 10:30, 11, 11:30, 1. So it's all day today, including additional auctions. And that one to me is a really big deal. It seems like I'm the only one that ever talks about these auctions, but they can completely change the entire trading day. So those are at 11, 11:30, and 1. I often say, watch the clock. There's nothing, you know, complex about that statement. Literally, keep your eyes on what time it is. Economic events happen on round numbers and half hours, right? We don't come in here and see that there's going to be pending home sales at 10:17. It's always a round number or a half hour. Well, these are only the highlight events. There's way more than this. They're just a little more obscure and they don't get covered in the news. But every single half hour and new hour, we get economic data in. Sometimes it'll move markets when it normally is supposed to be some boring, obscure thing that nobody's looking at. Rather than trying to hunt them all down and figure out which ones would or wouldn't move a market, just look at what time it is. If it's 2 minutes before a new hour, you should anticipate you're about to get some volume. So if you're running tight stops and trying to be a scalper on an intraday in the futures, and you take a trade 2 minutes before the new hour, and then you get stopped out before it continues to run in the direction you wanted to go, should have looked at the clock. All right, we are inside day breakout. That would be the green line here. We are higher than yesterday's level. We are also inside week breakout. We were inside the week. We've now run up and broke out of it. That was pretty much the baseline bet, that we were going to stay inside the range until we got FOMC, and then, we would leave the range in one direction or another. Well, we've accomplished that. We've left the range. Right now, we've got a bullish Marbozu pushing against the high with no wick up there at all. We are greatly extended from the 10, but we'll see in a little bit just how far that extension goes. And we've got this beautiful fan in the moving averages. This isn't really the forum to dig through, the deeper market breadth out there, but there's nothing bearish about this market, right? So if you're looking for everything to just tumble and crash in your short in your portfolio, maybe it's time to add some longs, because while everybody keeps saying the risks are to the upside, we continue to just keep grinding and grinding higher. And you got to trade what you have, not what you think we're going to get. Nobody wants to buy at these levels. I get that, right? I don't want to buy it here. I'm waiting for a pullback. And then, of course, the pullback never comes and you never get a trade, and you just sit there nice and grumpy while it continues to run. Don't be salty. 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We were at the highs and now we're going even higher. So we had talked about the compression of this thing yesterday and how likely it would be to find it squished. Well, we've broken out of it. So we're expanding the profile again. We're still going to lose this volume down here to the left as we continue to move through Thursday and into Friday. And that'll very likely put the bottom of this by Monday at 45.20. So we've taken out the 4,500 on this thing. I would say we have a classic D shape at this point, but with this expansion, we're going to start to see a little bit of a B, right? And it'll be a lowercase b instead of a capital D. No real surprises here. There's nothing that we can really discern from this to be able to take it with us. We know that we're in nosebleed section. It is worth noting how much volume we've already seen at this level, right? So if I was going to point out anything from this chart that is noteworthy, is that we have certainly come across a lot of volume at this level, and yet we continue to drive higher. Okay. And just keep in mind that the algos, they just balance the basket, and CTAs and volatility control funds, they have to buy when volatility drops. I mean, that's they don't get to choose. So it doesn't matter how expensive it is. They're going to buy it when their metrics say it's time to buy it. We have a VPOC from yesterday. It's always tricky. So we're going to keep our eye on that. It's very likely we won't go back and tag that. If you're looking for the rug pull, you're going to want to watch the sectors today and see if we lose the support of everything that's carrying us higher, right? Otherwise, it's just a prime setup for a lot of reversals and a lot of chop. We've also got a setup right now where we could just grind higher through the whole day. But I want to add a little bit of caution. let's just go back to this day here. This was a Friday. Pre-market, we had run up all night. It was looking really good into the open, and right near the open around 9 o'clock, it started to sell off. And, we had a pretty choppy, nasty day, and down we went. So there's this thing that I like to focus on called a trend day. Trend days are different than a normal day. They are special and they are unique. There's attributes that make them different than just saying, well, we have trend, right? A day like this, for an example, that's a day where people, get chewed up because they keep trying to short the market, thinking we've gone too far that day, it's going to turn around. And of course, it just keeps going and going. That is a trend day. A lot of times we can call this kind of day even before the bell rings, right? There's these kind of check marks that we can go through to determine that we have the capacity for a day like this before the day even opens, right? Before the 9:30 bell. It was easier before COVID because the volatility was different back then, but it's still viable. One of the things that we want to focus on is, are we inside of the Globex range? Because if we're inside the Globex range, no matter how beautiful the price action looks, we're not trending, right? If you're inside the previous day's range, then you haven't gone anywhere. And the very definition of trend is higher highs and higher lows. You don't have that if you're inside yesterday's range. So we're outside of our own Globex, check. We're outside of yesterday's range, check. We're outside of last week's range, check. Could today be a trend day? Yes. Some characteristics to identify that it is a trend day and that the move will continue higher, which is what nobody expects, right? Catching them off sides is one of the things that fuels the fire for a day like this, where we can just continue to go higher. If it's the thing that nobody expects and they're now caught off sides and surprised, it'll just keep going and going and going. So as we come into the open, if we don't fall back down before then, as we come into the open, there is now a gap that needs to be closed. The gap is from the 6 o'clock open last night to the RTH open, and or from the 4 o'clock close of yesterday to the 9:30 open this morning. So we'll just back up to yesterday and look at that for an example of the gap that we're looking for. So the 4 o'clock close and the 9:30 open. This distance was the gap. And we would be looking for that gap to be filled. So throughout the trading day in the RTH, we'd look for price to come up and make it back to that 4 o'clock close. Once it does, we consider the gap filled. So you can't really fill the gap in the overnight hours, right? We need the RTH because we're looking at an RTH, the 4 o'clock RTH close. So we need RTH price to run up there and hit it. Having said that, if we do cross through and close a gap over and over in the Globex, it's very likely that the RTH gap close won't have any merit to it. So this morning, the gap is really big, which makes sense, right? We closed way down here, basically right on that line, 45.98, and we're at 46.25. So we've got a really nice gap here. When we get into the 9:30 session, what you want to see is that price continues the gap, that it goes higher, not lower, in the very first 5-minute bar. Once that first 5-minute bar closes, you've got nearly all the information that you need. We can use yesterday for an example, even though yesterday was choppy and nasty and kind of meh. So we got the first 5-minute bar. Notice how we pulled off of that high and we closed higher than the low, or higher than the middle, which is, as best we can, right? We closed in the middle. And in the next bar, we didn't get out. And the next one, and the next one, and the next one, we're failing to get out of that 5-minute. Well, where was all this bullish push? I thought we were bullish. I thought we were going somewhere. So in that first 5-minute candle, if it closes at the high or near the high, the very next candle needs to giddy up, get out there. Keep in mind something that the old man said, right? classic Brooks Logic 101. No matter how powerful the move looks in the first 30 minutes, the market can still change its mind, and it will 50% of the time, right? No matter how bullish it looks, it could still flip in the first 30 minutes and be the opposite of what you thought it would be, with a coin toss certainty of 50%. Yeah. So at the open today at 9:30, we want to see what that first 5-minute candle does. Does it continue to try to go higher, or does the 5-minute try to close the gap? At the end of that first 5 minutes, are we near the lower end of the candle or near the upper end of the candle? And how big is the wick? And then, of course, once we've got that 5-minute bar set, we now have a 5-minute open range, and we would play the 5-minute open range break trade and or continue the gap close. It's one of those, right? Yeah, gaps are different in the futures than they are in the equities. Yeah, the equities gap for so many different reasons, earnings, dividend, all kinds of reasons that a equities gap. Futures, on the other hand, have their own little gap style. I know the baseline bet today is that we're going to go down, and I'm okay with that. I would love it to take a short, but I'm going to continue to stress caution and say just be careful, because this market doesn't owe us a move to the downside. The last chart I didn't hit on how far away we are from the 10-week. We are above 4%, right? So what's that mean? We're more than 4% away from the 10-week moving average. Now, every company and every product has its distance from 10 that matches it, right? How far X steel gets from the 10-week before it likes to pause and reverse is completely different than how far Tesla gets from its 10-week before it needs to pause and reverse, right? So that makes sense. And that's why I built this indicator. We need to know what the historical turning point is for whatever market we're looking at, and then identify where are we on that scale. So if we look at where we are right now, 4.08, 4.07, and we look across over the last 2 years, you can see that we have gone higher than where we are now, but not very often, right? What, 4 times? Even someone with missing fingers like me can count that, right? So we're not necessarily guaranteed to turn around and go back, but we're getting to a point where the market's going to consider itself overbought, or it's going to consider that it has moved too far, too fast, and it's going to look to resolve this either through a mean reversion or just by staking or basing, right? Putting in a topping pattern. All it has to do is not go up. That doesn't mean it has to go down. It just has to not go up. A big difference between those two. Having said that, it doesn't mean that it's gonna go down. And this is a weekly measure, right? So where we're at minute by minute has no bearing on our weekly impact, right? So 4%. We're overbought. We have moved too far, too fast. Looking at the daily, not so bad. We're only 1% away from the 10-day. And as we can see, looking back historically over at least 2-year time frame, a 1% rise above the 10-period daily moving average is nothing. So in the short term, we're not overbought. We haven't moved too far, too fast. In the bigger picture, yeah, we're extended. And to kind of give you an idea of what that extension looks like, here's a weekly chart on the right side, and there's the 10-period moving average. And as you can see, I mean, it just looks parabolic, right? So that's the weekly saying we're overbought and we've moved too far, too fast. But on the daily, nah, we're good. which is why I keep saying we don't have to go down today. We don't have to go down this week. So this morning we've got communications. I seen a pairs trade call out on Spot Gamma where they said long XLC, short XLK because of the gamma structure in the cues. It was interesting. I haven't had a chance to look at it yet, but it's certainly something to put the chart together and take a look at what that pairing sample would offer you. So we're long XLC this morning. We're up 2.94%. The FANG names are up 2.3%. We have semiconductors. We have telecommunications, technology, banks. We have everything we need to continue this run to the upside. Bitcoin, emerging markets, even energy is up a little bit. Now, those aren't up enough, right? My benchmark is 0.5%, but they're moving in the right direction, right? So we got bonds flat to maybe kind of trying to come up a little bit. So stocks and bonds moving in the same direction. Remember, risk parity is dead. We got cloud computing, everything on the box that we would check. What we don't have, jets and nat gas. I mean, okay, you know, the airline LUV missed hard, right? Nosedive, pun intended. So, you know, one name just spoils the bunch. And nat gas has been a turd. So that, you know, that's not a surprise. Gosh, where'd that come from? It was doing so good. Nah, it's been a turd all along. So semiconductors, check. Technology, check. Energy, check. We don't have an ETF that I want to use. And someone was gracious enough to go find one. Unfortunately, it's not a good one, so we can't use it. And I know you go to Google and you can search, you know, for ETFs and you can find ETFs. I don't have an ETF for the EV market that I like. They just don't have one made, right? So the ones that they have are illiquid junk that I don't want to use. And so when it comes to trying to figure out what's going on in the EV market, you can use something like Thinkorswim and you can make your own ETF. That's one of the great things about using Thinkorswim, right? So if we wanted to make an ETF for the EV market, we could just XPEV. And of course, these aren't weighted yet, but we can actually weight them too, right? Just like how an ETF would be weighted. But we got XPEV, NEO, technically Tesla and GM and Ford, since, you know, especially Tesla. Lee, I know I know I'm missing something somewhere. In KLA. Oh, I didn't like that one. I might be missing some, but there we go. XPEV, NEO, Tesla, Lee, Rivian. And we can make an ETF that represents those EV markets. How are the EVs doing this morning? Oh yeah, they're up. We can do the same thing with just about any market, right? Semiconductors, airlines. We don't have to use their ETFs. We can make our own. Every single thing that we need to call a trend day today, we have. We have every box checked. So can today be a continuation in the trend? Yes, absolutely. 100%. This could just keep right on going. It does not owe us a pullback today. So until we have something that says otherwise, you have to go with what we have, not what you think we're going to get, right? For a short today, if you're looking for the short, you want to start to see all of these sectors maybe flatten out, turn around. Maybe we lose finance first. One of those would be really important. We got that banking conference this afternoon. So maybe we lose finance and that starts the turn. Otherwise, we got to break down through pivotal levels. The most basic one of those would be this shelf in the Globex getting below 46.19. Right? If we get below that, then we can target the high of yesterday. We get back inside of that, then we can target the Globex high of yesterday. And we get through that, we can target the RTH of yesterday, right? Just on and on, one level at a time. But the very first thing we would have to do is actually break down through some key levels. Pulling back at this point and bouncing off the top of that 46.22 is not enough to think that we should go out and load up on puts and short this market. We're going to need more than that, right? So that's kind of the warning that I'm giving. Don't try to short this thing just because you feel like it's overbought. In the daily time frame, we're not overbought. We're only 1% away from the 10-day. And that's nothing. So we know that we've got EV. It's a little nasty, but we do have pot stocks. We certainly have we have semiconductors. We got banks. We got everything, including the Dixie heading to the downside, the 10-year yields fading down away from that monthly level, and bonds kind of just holding that sideways level, right? Really not doing a whole lot of nothing. So with that kind of backdrop, it's really hard to try to short this thing. That's what I got for you guys. Short, simple, and sweet. Be careful today. Be safe. Watch those flows, right? That if there's going to be a turn, it's going to be a rising tide scenario, right? You know, they say a rising tide lifts all boats. Well, a falling tide drops all boats. We've got nearly every single sector that matters. No, let's say it differently. We've got every sector that matters. In fact, let's do something I haven't done in a while. Let's go to Trading View and see how many numbers we have, right? This is something that I generally do on Thinkorswim at the open. We've got that advancing minus declining issues, right? It's a very detailed advance versus decline. It tells us exactly how many companies are going up versus how many are going down. But in the pre-market, we can use something like TradingView, and we can ask the same question. How many names in the S&P are up at least 0.5%? 33%. Okay, I mean, that's not bad. It's pretty good. That's not crazy overly bullish, right? And then how many names in the NASDAQ are up at least 0.5%? 48. So 48% of the NASDAQ 100 is up at least 0.5% this morning. Again, that's not crazy bullish, and I like it that way, right? We don't want it so crazy over bullish in the pre-market that by the time we open, the move of the day has already been done and we just chop around for the rest of the day. That sucks. How many names in the NASDAQ are up more than 1% or at least 1%? 36. So 36% of the NASDAQ is up more than 1% this morning. 18% of the S&P is up more than 1% this morning. These are solid numbers, right? This is pointing to a continuation of a bullish move. And nothing in here at this point is telling us that we're going to go down or that you should short this market. That's what I got for you guys. Be careful, be safe, have a good day, and I'll